We're thrilled that you're able to be here with us. Part of our mission at the Seattle Southside Chamber is that we connect and convene. And even though we are experiencing these challenges where we cannot connect and convene in person, we are grateful for the opportunity to be able to connect and convene through our SMART webinar series. The Chamber created SMART, which is the Southside Mitigation and Recovery Task Force, as a direct, actionable response to the impacts that our community and our businesses are feeling due to the coronavirus pandemic. So part of our action plan is to host these opportunities to share education and resources with our community. We also hope to be establishing a fund that would be coming through our Success Foundation, which is our 501c3 dedicated to education, workforce, economic, and community development within the Southside community. That would be a fund that would go directly to the businesses and nonprofits that need that direct support now more than ever in terms of cash. We are also doing a lot of marketing and promotion. So we know there are some businesses that are still open, able to continue to take business, whether that's online or through carryout campaigns. And so we continue to do that. So again, three main mitigation forces. One, through our webinars, education, resource sharing, connecting and convening, continuing to do the marketing and promotion for our businesses and our community, and then the establishment of a fund. And I see that most of us have been able to join, and we will go ahead and get started here. So first, I would like to turn it over to Renata Emerson. She is our not education, although you do a lot of education, but our membership and programs manager, and she's going to give us a little bit of information on what we can expect for the webinar today. So Renata?
Thank you, Andrea. And again, thank you everybody for logging on today and joining us. I just want to give some quick housekeeping for folks. I think we're still getting in the swing of using Zoom. So for those of you who this might be your first or one of your first sessions, again, thank you. And just to give you the lay of the land, what we're looking at here, I want to start with view. If you can see my face primarily on your screen, then you are in the correct view, which is gallery view. If you see all three of us kind of equal size on your screen, you're in speaker view. So I encourage you to take your mouse up to the top right of your screen and make sure you click that over so that you are in gallery view. And that will enable you to be able to best see the presentation and the information that we show later on during this webinar. Next up, down towards the bottom of your screen, and when you hover your mouse, you'll see your menu there. You'll see a participants icon that shows that there are 89 of us currently on. And next you'll see a Q&A button. If you click that Q&A, that'll enable you to input your questions at any time during the presentation. I will be monitoring the Q&A, and so please feel free to put your questions there at any time, and I can make sure that we can address those as time allows. And there is also a chat icon at the bottom if you want to share anything or post anything to the rest of the group. That happens there in the chat. So those are the main things that we will be utilizing today. I do want to also comment that if you are a participant, everyone is muted, and that will remain the case. We'll be communicating, you'll be communicating with us via those text features that I just mentioned there. And I believe that brings us to all of the housekeeping. So with that, I'll turn it back over to Andrea.
Perfect. Thank you so much, Renata. And again, just so grateful to have this opportunity to connect with you. As Renata mentioned, the chat box that for the Q&A is going to be the best way to utilize that, and she will be facilitating that We are also understanding that we do have a hard stop with our expert today, Chris Eyler, with the U.S. Chamber 10 minutes before 1. So it's possible we might not get to all of your questions. Please know that you can send us those, and we'll have those. We'll get answers to you, remotely if we're not able to get it to you live here and now. And so again, our chamber was founded on the belief that we are better and stronger together, which is why we are so grateful for you, our members, our community, and our partners at the U.S. Chamber with Chris Eyler to be able to share what he has learned on the CARES Act. We know there are a lot of questions as we have, seen the programs roll out over the last couple of days. He has a presentation that we'll walk through. And so again, Chris, over to you. Thank you again so much for being here.
Great. Thank you, Andrea, and thank you, Renata, for the kind introduction. Again, my name is Chris Eyler. I'm the U.S. Chamber's Executive Director for the Northwest region. And as Andrea said, I am going to walk you through the provisions of the CARES Act, primarily the provisions related to the business community. Could I have my first slide, please? Actually, the next slide. There you go. To give you a sense of the scope, the CARES Act is a $2 trillion package. This is just about 10% of US GDP. It was enacted, it is the third bill of the federal government's coronavirus response. The first bill was largely a supplemental appropriations bill passed at the beginning of March. The second phase bill was the Families First Coronavirus Response Act. I will touch briefly on this towards the end of the presentation, but in general, the phase 2 bill included provisions providing paid sick and family medical leave. It expanded eligibility for unemployment benefits, and it included additional resources for state Medicaid funds. The largest package, though, again, is the CARES Act. This is the phase 3 bill. It is intended to be a bridge to help our economy get to the other side of the current crisis. There's no doubt at this point that the economy is going to suffer some form of a recession. The government's goal here is to try to make that recession as brief and shallow as possible. I will say that there is already discussion underway about a possible phase 4 bill, and just this morning we saw that the administration and Congress are considering including additional financial resources for the Paycheck Protection Program and the SBA Economic Injury Disaster Loan Program, which I'm going to talk about. Those programs are already looking like they could potentially run out of money in the next 2 weeks, and Congress is considering including an additional $200 to $250 billion at some point soon. But I will discuss that all shortly. The CARES Act has three significant sections. The first are benefits to individuals. The second and largest really are the benefits being provided to the business community. And then the third are benefits being provided to hospitals. There's $100 billion being provided to hospitals. There's an additional $150 billion being provided to states and localities. But again, my focus today is going to be on largely on the provisions being provided to business. But first, I just want to touch briefly on what's being provided to individuals. At some point, I believe beginning on April 9th of this week, the Department of Treasury is going to be issuing checks to both individuals and joint filers. Checks will be provided to individuals in the amount of $1,200 if they make $75,000 or less. Between $75,000 and $99,000 per year, the individual check will gradually phase out completely for incomes above $99,000 per year. For joint filers, those filers will receive a $2,400 check up to an income level of $150,000 per year. Between $150,000 and $198,000 a year, that $2,400 check will gradually phase out completely at $198,000 per year. Income levels at $198,000 per year. And then there's an additional $500 check per child provided to both individuals and joint filers. As I mentioned, the phase 2 expanded eligibility for the state unemployment benefits. It largely suspended all eligibility requirements if the unemployment is related to COVID-19. Additionally, it is providing a $600 per week added amount on top of the regular state benefit. This $600 is going to be provided by the federal government, and this benefit will be provided through July 31st. All a state has to do is accept the additional benefit from the federal government, and then that money will be provided on top of what the individual is receiving from in the form of unemployment benefits. Eligibility for the expanded unemployment will end when an individual can return to work, meaning if an individual has been laid off or furloughed as a result of this crisis, and then businesses reopen and that individual is called back to work, that is the point in when the eligibility for the expanded unemployment benefit expires. And how do you get this? Just like you would any other unemployment benefit, you go to the state's unemployment insurance office. Next slide, please. As I said, the largest provisions in the CARES Act have to do with providing assistance to employers. And the policy objective here is to provide businesses with the resources they need to keep their employees paid during this disruption to our economy and keep their businesses functioning and paying their obligations. To that end, the bill provides provisions that will apply to all employers, some provisions that just apply to mid-size and larger employers, and then some provisions that are carved out specifically for small businesses, the self-employed, independent contractors, and nonprofits. Next slide, please. When it comes to the provisions being provided to all employers, the CARES Act makes a number of changes to the temporary changes to the federal tax code. The most significant of these is that it allows businesses to delay the employer portion of payroll taxes. This is the 6.2% that all businesses pay for each of their employees to fund Social Security. It allows businesses to delay that between now and January 1st of 2021. If a business elects to delay their portion of the payroll tax, the amount that they're delaying, 50% of that does not come due until December 31st of 2021, and then the remaining 50% does not come due until December 31st of 2022. The purpose here is to give businesses more liquidity and more cash on hand so that they can continue to pay their obligations and most importantly, continue to help pay their employees. Now, there is an interaction with this provision and the Paycheck Protection Program. If a business elects to delay payment of their their portion of the payroll taxes, they cannot obtain loan forgiveness under the Paycheck Protection Program, which I'm going to talk about in a moment. Additionally, there are a number of other changes to the tax code. Businesses can now carry back for 5 years net operating losses for 2018, 2019, and 2020. They can accelerate recovery of AMT credits. This is something that's largely going to be claimed by larger corporations. And then most importantly, or most significantly, it fixes a glitch or a drafting error in the 2017 tax code, which for the past couple of years has prevented businesses from claiming the qualified improvement property deduction. Now businesses can claim that deduction. This applies to a lot of retail establishments and restaurants that have made improvements to their property. Next slide, please. One of the provisions that isn't really getting a lot of attention is a newly created tax credit called the Employee Retention Tax Credit. This was a late addition to the bill. It was not in the original draft, but what it is a tax credit to assist employers who continue to pay their employees during the crisis. It is a refundable tax credit for 50% of wages paid by the employer up to $10,000 per employee. So think of it as a $5,000 tax credit. It is to help employers who have either fully or partially shut down or who have experienced a 50% drop in gross receipts compared to the previous year. Now, in essence, what this means is if a business has idled some of their employees and those employees are not currently working, but they continue to pay those employees, they can get this tax credit for what they're paying their employees. There are some restrictions. Employers with with more than 100 employees, it will only apply to the employees that you are continuing to pay who are not currently providing services. So if they're working from home or working remotely, or if they're actually coming in, if they've been deemed essential employees and they're coming in, you can't claim this tax credit on those employees that you're still paying and they're providing services if you have more than 100 employees. You can only claim it on the employees who are you're continuing to pay, but they're not actually providing any services or not actually doing any work. If you are an employer with 100 or fewer employees, you can claim this tax credit against on all of the employees that you are paying, the ones who are working as well as the ones who aren't providing any services or doing any work. Again, there is an interaction with the Paycheck Protection Program. If an employer claims this tax credit, they cannot also receive loan forgiveness under the Paycheck Protection Program. Additionally, Treasury is taking regulatory steps to allow businesses to claim in advance on this credit so that they can get that money now versus when they file their taxes. That way they will have the money on hand to continue paying their employees. Next slide, please. One of the larger portions of the bill is the $500 billion that is provided for loans, loan guarantees, and a Federal Reserve credit facility to provide loans to mid-size and larger employers. $46 billion of this $500 billion has been carved out specifically for the airline industry and critical national security businesses. However, $450 billion of it is being reserved for businesses at large. These will be traditional loans, as you would think of any other loan. They're obtained through private financial institutions. However, there are some restrictions being placed on these loans. Specifically, it's going to limit a business's ability to do stock buybacks during the life of the loan plus 1 year. And there's going to be some restrictions being placed on executive compensation. We are currently waiting for more guidance from the Department of Treasury on how this program will work. We expect that guidance to come out in the next week or so. Next slide, please. The most significant program created under the CARES Act is what's being called the Paycheck Protection Program. This is a program specifically for small businesses that are generally less than 500 employees, 501c3 nonprofits, self-employed, sole proprietors, and independent contractors. They are also allowing restaurants and hotels to apply based on a per location basis. So if a restaurant is part of a national chain or a hotel is part of a national chain, generally they would not typically be eligible for this type of program. But for this specific program, they are allowing those businesses to apply on a per location basis, so that for the most part, those businesses will come in under the 500 or fewer employees requirement to become eligible for this program. These are loans equal to 2.5 months of average payroll up to $10 million. They are loans that are provided through local and national lenders. Right now, under guidance issued by the Small Business Administration, any SBA 7A qualified lender can make these loans. And additionally, any FDIC insured bank or credit union can also make these loans. They have vastly expanded the number of lenders that can issue these loans, the purpose being to get money into the hands of small businesses as quickly and easily as possible. They have also lowered the requirements to obtain a loan. There's no collateral required, no personal guarantee required. All that really is being asked of borrowers is that they make a good faith declaration that their business is being adversely impacted by the ongoing COVID-19 crisis. The most attractive feature of these loans is that they convert to a grant equal to the amount that the business has spent on payroll, rent, interest on mortgage, and utilities for the 8-week period following origination. Again, the goal of Congress here with all of these programs is to keep the employee and the employer connected so that the employee continues to get paid, and then when we get to the other side of this crisis, businesses will be able to reopen and more easily bring their employees back in to continue to start work again. Now, again, there are going to be some restrictions placed on forgiveness. Loan forgiveness will be reduced proportionally if the employer reduces the number of FTEs during the crisis. And loan forgiveness is reduced if the employer reduces wages by more than 75%, or I'm sorry, more than 25%. In essence, of the amount of the loan obtained by the business, 75% of that must be spent on payroll. Now, the employer can avoid reduction in forgiveness if they bring back the employees that they may have laid off before this program was put into place and restore their wages by June 30th. That means that under the Treasury and SBA guidance, any employee that has been laid off between February 15th and April 26th, those employees must be brought back on payroll by June 30th in order for that business to avoid any kind of reduction in the amount of loan forgiveness they receive under this program. Next slide, please. Now, I know that there's probably a lot of questions about what businesses qualify, what types of things go into the calculation for payroll, and what types of things will the lender look at when they're working with the SBA on loan forgiveness at the end of the loan. The U.S. Chamber has created a 4-page document and small business guide and checklist to walk you through all of these steps and all of these questions. Because Treasury and the SBA is pushing out new guidance each day, we are trying to keep it as updated as possible. But I would encourage you to go to our website, uschamber.com/SBA loan or SB loans. Download this document. I've also distributed this document to all of the local chambers in Washington State, and I believe that they have it as well on their website. Take a look at it. If you generally feel that you qualify under the parameters spelled out in this document, I would encourage you to start talking to your lender now. There is a high demand being placed on lenders to distribute these loans, and the sooner you get into the queue, the faster you're going to be able to obtain one of these loans. Next slide, please. The other major small business piece in the CARES Act is an expansion of the SBA's Economic Injury Disaster Loan Program. This is a loan program that has been around for quite a while. It is a program that businesses often take advantage of when they have experienced a hurricane, tornado, earthquake, or other natural disaster, and the loans are intended to help them get through those disruptions in their business. It is open to small businesses and nonprofits, all nonprofits, including 501c6s and faith-based nonprofits with fewer than 500 employees. It's open to sole proprietors and independent contractors. It provides up to $2 million in working capital on a 30-year term at 3.75% and a slightly reduced interest rate for nonprofits. The payments under these loans are deferred for up to a year. And under the CARES Act, they have lowered the eligibility. Loans will now be based on credit scores. No tax returns will be immediately required. Loans of up to $200,000 can be obtained without a personal guarantee. No collateral will be required for loans of $25,000 or less. Loans greater than that amount will require a general security interest, but not a collateral of real estate. The SBA is trying to get away from requiring real estate collateral, and instead they're using a general security interest. One of the features of these loans that is brand new under the CARES Act is that a business, when they're applying for the loan, can request up to a $10,000 emergency grant that will be provided within 3 days. This grant does not have to be repaid. And even if the underlying loan application is not approved by the SBA and you have received this $10,000 grant, you do not have to repay the $10,000 grant. Now, just a little bit of caution here, because of demand being placed on SBA right now and the number of applications they're receiving, these application or the grants are not being issued necessarily being issued within 3 days of you applying. They're being issued within 3 days of SBA reviewing the loan application or the application for the grant. The amount of time that it is taking SBA to get to each application is, from what we are being told, is stretching anywhere from 14 days to 21 days. But once they get a chance to look at the application and review it, we are being told that they are issuing the grants within 3 days. Again, there is an interaction with the Paycheck Protection Program. If a business receives an EIDL loan, and then subsequently receives a PPP loan, the $10,000 grant will be subtracted from the amount of loan forgiveness under the PPP program. Unlike the PPP loan, this is a direct loan from the SBA. So to obtain it, you go to sba.gov and apply directly with them. Lastly, as I said at the outset, Congress appropriated $349 billion for the PPP program, and there is also a $10 billion cap being placed on the EIDL program emergency grant. It is expected that both programs will hit those caps very shortly. This morning, it was announced that Senate leadership is working on a plan to provide an additional $200 to $250 billion for these two programs so that they can continue providing the assistance once they hit the caps under the original CARES Act. Next slide, please. Oh, and I should also mention on the EIDL, just like with the PPP program, the U.S. Chamber has developed a one-page guide to assist you in determining whether you are eligible to apply for these loans. That is also on our website, uschamber.com, and I would encourage you to download that as well. I have also distributed it to Andrea and all of the other Washington State local chambers. The last thing I want to go over is a few of the items that were included in the Phase 2 bill. Under the Phase 2 bill, employers with fewer than 500 employees are now required to provide 10 days of paid sick leave if that leave is related to COVID-19. This sick leave can be taken when ill, quarantined due to exposure, to take care of a sick or quarantined family member, or to take care of a child during a school or daycare closure. The leave is to be paid at the employee's regular rate of pay up to $511 per day, and that's if the employee is taking care of themselves. If the employee is taking care of a family member or a child whose school has closed, the rate of pay is 2/3 what the employee would typically receive, up to a maximum of $200 per day. Now, recognizing that a lot of small businesses simply don't have this kind of money on hand to pay, the payment will be completely reimbursed by the federal government. It is being reimbursed through a refundable tax credit paid against the employer portion of the payroll tax. Now, Treasury is working on guidance so that that tax credit can be paid as an advance to the business, so the business has the money on hand to pay their employee now. This leave will be in addition to any other leave that the employer already provides. And there is an exception being made for very small businesses with fewer than 50 employees if providing that leave that is related to caring for a child whose school or daycare is closed would threaten the viability of the business. And then lastly, the paid sick leave will not be available if the employee has the ability to work remotely or telework. Next slide, please. And then the last provision of the Phase 2 bill that I want to discuss is that in addition to the paid sick leave, it also is requiring small businesses with fewer than 500 employees to provide up to 10 weeks of paid FMLA, but only if the employee needs to take care of a child due to a school or child care closure caused by COVID-19. That is the only reason that a business would be required to pay paid family leave for up to 10 weeks. The leave would be paid at 2/3 the employee's regular rate of pay, up to a maximum of $200 per day and $10,000 in the aggregate. Uh, like with the sick leave, it is in addition to any leave that the employer already provides. Additionally, the federal government will reimburse the employer through a refundable tax credit against their portion of of payroll tax. And there is also a similar exemption for small businesses with fewer than 50 employees. But again, this is only in cases where the employee would need to be out to care for a child whose school or daycare is closed, and if providing the leave would threaten the viability of the business. And then lastly, as with sick leave, this paid leave provision or paid leave benefit is not available if the employee can either work remotely or otherwise telework. Next slide, please. Now, I know that that is a lot of information that I've gone through in a very short period of time. We are trying to keep up with everything that the Department of Treasury, the Department of Labor, and the SBA is putting out to help businesses or to help lenders and businesses access these programs. You can find all these materials on our website, uschamber.com. I'm also distributing all of our guide documents to the Washington State local chambers. So I'd encourage you to work directly with Andrea and Renata because I know that they have all of those resources. And I also encourage you to keep in mind too, these programs were designed to be as broad and flexible as possible in order to get the money out quickly and in the hands of small businesses. To that end, there are a lot of ambiguities and there's a lot of vagueness in this particular statute. That was in part by design. It was also a result of how quickly this legislation moves through the process. So there are going to be a lot of questions. And so we are doing everything we can to provide guidance. But as I said earlier, if you feel that you fall generally into the categories of a business that would be eligible for these programs, I highly encourage you to start talking to your lenders now to determine which of these loan programs would be best suited for your business and start getting those applications in. Because even though Congress looks like it will begin adding more money to these programs, these applications are taking quite a while to process given the newness of these programs. And there's still going to be a finite amount of money. So you want to get in now and get that money while you still can. And then lastly, the U.S. Chamber also has a small business website where we're posting a number of documents providing guidance to help businesses better deal with the current crisis, some best practice documents, things that businesses should be doing if they continue to be open, and things that businesses should be considering doing in terms of staying connected with their employees throughout the duration of the crisis. So with that, I'm happy to take any questions. Thank you.
Thank you so much, Chris. So we have several questions here. I want to address ones that I've kind of seen several of that are regarding single employee LLCs and eligibility. So we'll start with that one. And that question is simply, are single member LLCs eligible for the Payroll Protection Program loan if they have no other employees and thus no payroll, but haven't been able to work?
Yes, they are eligible.
All right.
And one thing I want to, because I think this will come up a lot, even if you are not an essential business or you're not otherwise able to operate, you are still eligible for the PPP loan, because remember, the policy goal here is to enable you to keep paying your employees. So it is immaterial whether you are an essential business or still operating. They want to make sure that you have the money to pay your employees and to pay obligations like your utilities and your rent and mortgage interest. they want you to be able to do that if you have employees, and they want you to do that if you are an independent contractor or sole proprietor or other one-person business.
So speaking on the contractor point, this question says the SBA interim regs seem contradictory with the 1099 contractor payroll expenses. Both the regs and the law itself explicitly reference 1099 contractor payments as payroll for purposes of the PPP. But if the IFRs also pay the contractors, let's see, it says, but if the IFRs also say 1099 contractors should themselves individually apply for PPP rather than have the business apply and include them in its payroll computations.
So this has come up a couple times, and I have asked a couple times as well, and every time I have been told independent contractors, including 1099s, can apply on their own. So my advice to you here is to talk directly with your lender about this and how those should be factored into the payroll calculation.
Okay, thank you. Let's see, this question is also on the PPP. There is a business owner whose payroll varies significantly now from what it was in 2019. Over the course of the year, she's gone from 3 full-time, including her and her business partner, to 1 part-time employee and 5 full-time employees. Unfortunately, the average payroll costs are now 2.5 times. It's not enough to cover her current payroll obligations based on the fluctuation in her staffing over the last year. Is there a workaround for this, or is there a way that she can reflect this in her application?
I don't believe so. I think it's based on the prior year. If you were in business last year, and if you weren't in business last year, it's based on payroll costs in January and February of 2020. So I don't think that there is a workaround.
All right, thank you. Someone says they're in the trucking industry with 4 independent contractors who are dependent for their weekly resettlement. But now that there's no work, there's nothing to pay them. And so this company is paying for their insurance and they're still paying out monthly expenses. The question is, we've tried to apply for Paycheck protection program. And again, we're told we're not eligible for PPP because we didn't pay a payroll. So yeah, as an independent contractors, we pay our contractors for a check for what they work and that they've done. And the company at the end of the year, they give them a 1099. What can they do to get assistance?
Well, each of the independent contractors can apply for PPP on their own.
There was another person that says they were in the trucking industry and that they were told that they were not eligible. Is that still the case?
The trucking industry or the
independent contractor tried to apply for the unemployment benefit?
Well, the independent contractor can apply for the PPP.
Right.
So they should apply for the PPP.
Understood. Yes, and if there's clarification, if I respond to your question and you still have additional clarification, please feel free to type that back in the Q&A and we can address that as well.
And if I'm a little unsure, flag that question for me and I'll follow up with our folks in DC as well.
Okay, sounds good. This question says, let's say my bank is not in the lender's list. What should I do?
You should look for one of the banks that is. Right, they've expanded it quite a bit. Like I said, it's all 7A lenders as well as any FDIC insured credit union or bank.
And I apologize if you address this one. Does the employee retention credit apply to 501c6s as well?
Yes.
Okay, very good. Let's see, it's still coming in, so you guys are doing a great job. Okay.
Back on that last question, we also have a one-page document that that thoroughly explains the employee retention tax credit. That's also on our website.
Perfect. Okay, that's on the Small Business Resource website.
Yes, it should be.
Okay, perfect. And again, we will be with the follow-up communications, we'll be posting where you can find this webinar posted for future viewing, and also the documentation, the presentation will also be included for download there as well.
And I will send you the direct links to each of these documents so that you can attach them to that.
Perfect, perfect, thank you. Okay, someone says, what documentation will an employer need to pay the 10 days of paid sick leave? Does the employee need to request it?
That is a good question. Where is my... Let me get back to you on that one.
Okay, I'm making a note on that as well. Okay, this question says, I've seen other literature that shows the PPP program doesn't apply to employees making over 100,000 a year. I did not see that limitation here in the presentation. Could you clarify?
Oh, and you know, that is my fault. I neglected to include that in my remarks. That is correct. When you are calculating the payroll expenses, it is on the first $100,000 of income per employee. No income above $100,000 can be factored into the payroll expense calculation under the program.
Great. Okay. It says, and it sounds like a similar question that we might have answered before. I'm a dentist, PLLC. I've been told that I can apply for unemployment. Is it true? I tried, but the Washington website isn't updated. And when will that be possible?
I can't speak to when Washington's website will be updated, but I can say, again, you know, you are eligible to apply for the PPP loan, and I would encourage you to look into that as well.
This question is, can an employee receive federal sick leave if they decide not to work at an essential company because they decided to self-quarantine?
I need to double check on that one. That's one I haven't been asked before.
Okay.
I believe so, but I can't say for certain.
Jay Schlosser, I might ask for a little bit clarification. You've got kind of several lines here. You're saying how regarding the 10 days paid sick leave, how does that work for, say, the 1099 basis trucker?
I don't know that they would be, because they're an independent contractor, I don't know that they would be eligible. So I will confirm and get back to you, Renata.
Okay. And again, I'm also taking notes there as well. We want to make sure that we follow up with you guys on that. Okay, and I'm seeing some questions here in the chat that I had missed. Okay, so under PPP, so it's a clarification, are the reductions based on previous pre-COVID payroll or based on changes during the duration of the loans?
Duration of loan. So from the period starts February 15th. Any employee that was let go February 15th through April 24th will need to be restored by June 30th in order to avoid any kind of reduction in loan forgiveness.
Great, thank you. Can you further explain regarding PPP and payroll, rent, interest on mortgage for the 8 weeks after the origination?
So the eligible amounts that can be forgiven under the PPP program are payroll costs, interest on mortgage obligations incurred in the ordinary course of business, rent on a leasing agreement, payment on utilities, and for borrowers with tipped employees, any additional wages paid to those employees in the form of tips. Those are the eligible expenses that can be forgiven under the PPP program. Additionally, of the amount of that, the amount that you have borrowed, 75% of that must be spent on payroll.
How much, okay, so this is for EPSL and FMLA. How will documentation for those things be handled due to confidentiality concerns from employees?
I can't really speak to that.
From the same attendee, under the daily maximum employee reimbursement levels for the FFCRA, can we use 4-hour workdays or 8-hour workdays required?
It's based on the 10 days it's based on 80 hours for the sick leave. So it's based on an 8-hour day.
Great. Next question is, what happens if after all this an employee chooses not to return to work and that brings their employee retention numbers to lower than 25%? Is it based off of wages paid or number of employees?
It's based off head count.
So if the employee
So if you had
chooses,
10 employees and you let one go and then you didn't want to come back, you just have to replace the employment level.
okay, so this one is back to kind of a clarification on what can qualify. Can rent and utilities on your personal home qualify if you work from home under the PPP?
That one I don't know. I will ask that one. That has not come up as a question before.
I love that all of our members are coming up with the questions that have never come up before. So thanks, Chris. I'm glad that we're able to get you a little challenge here.
Okay. So next question is, can you include furlough employees in your payroll cost as you've had to furlough them in the past several months? Or is it just actual payments used in the calculation? Also, can you include furlough employees in the total numbers of your head count?
They're going to look at the numbers after February 15th is what they're going to look at. So if you furloughed people before that, that isn't going to be factored into the number of employees that you need to have back on staff by June 30th. It's those employees that were laid off or furloughed between February 15th and April 24th that need to be brought back on. Now, if you've let anyone go after April 24th, you cannot cure that.
And just to clarify, you had said an employee by June 30th must be restored or replaced.
Correct.
Or the position must be restored.
Correct.
Okay,
Correct.
great.
While you're looking at that next question, Renata, I have a question that has popped up a couple times here in the Q&A box. Is that some businesses, when they have gone to apply, have heard back from their lender that the idle grant amount can only be $1,000 for businesses with 1 to 10 employees. Chris, could you talk a little bit about, again, there's just so many rumors that are swirling around about who gets preferential treatment for the idle? Do larger employers, are they going to be funded first and at, larger levels than the smaller employers? Are smaller employers kind of, left in the dark? If they only have one or two employees, are they limited to, what they will qualify for a certain amount? Is there some type of correlation that the SBA is doing with number of employees and the amount of available funds that they're getting? Could you kind of speak to that a little bit? There's a lot of questions about
So,
that.
so this is something that we started to hear as well yesterday, specifically that SBA is only, the statute says that they can receive up to $10,000 in the emergency grant, and SBA apparently, at least some SBA offices are making that grant based on a $1,000 per employee basis. We are trying to get more clarification out of SBA on this particular practice. Like I said, the statute was very vague and very general. It didn't spell out things specifically, and it's left a lot of this up to SBA. So we are working to get better guidance from SBA on how they are going to award the basis on which they're going to award the $10,000 grants.
Thank you. This question says, I understand that employer retirement contributions are included in payroll costs. If you've not made your ER 2019 retirement contribution yet, can you include this? Or just the employer retirement contribution for 2018 that was paid in 2019?
I don't know. Can you send me that specific question and I will have that answered by our tax folks?
Yeah, definitely. This question is, can a property owner of rental property with employee claiming that business, can they apply and qualify for the CARE Act and the PPE program?
Could you repeat that?
Oh, it just went away.
It was basically if a rental property, right? And maybe the person who typed that, I can go into the answered questions and look at that because we were answering that live. But if the owner of a rental property can, claim is it the tenants? Is that what that question was? If they could type it again. Looks like we lost it. But again, I think that there are, certainly a lot of issues that we've heard at our chamber with landlords and property owners, and their tenants are having a hard time with paying their rent. And so maybe even just a general question about, if you are a property owner or you're an employee, working, for, a rental company, are you eligible then, for, some of the assistance programs that are available? And would that be, specifically, applying as a 1099, through the CARES Act, or would the rental company, be able to, claim that employee for the PPP?
Well, if the employee is an employee, not an independent contractor of the rental company, then the rental company can claim that individual as an employee for the calculation of the payroll expenses, and the rental company can obtain a PPP loan and continue paying that employee. If the employee is an independent contractor, then the employee would have to apply for their own PPP loan.
Looking at some of these that are that I think we've already covered.
Someone reached out to their banker and the bank told them that they'd already hit their limit. This is something that we are starting to hear as well. And the banks are hitting their own internal limits on lending. And we've been told that the Federal Reserve is working to create some lending facilities that will basically have the effect of allowing a lot of these banks to begin increasing their own lending limits to start pushing out more loans.
Are the PPP and unemployment mutually exclusive? Should single member LLCs apply for unemployment, or is the PPP how the CARES Act is addressing unemployed people?
I think that's good. That is a you've got to do the math on that yourself and determine which is going to work best for you. If you're going to apply for unemployment as a sole proprietor or independent contractor, or if you're going to get the PPP. Um, you need to look at all of your options and determine which is going to work best for you. But you are eligible for both. You just can't get both.
Great. We have another, couple questions here about, we've heard some reports that sole proprietorships, family-owned businesses, that they would be able to apply for different programs mid-April. Is that kind of a response to what, you're hearing, Chris, and, kind of what we're hearing talking to some of our federal lawmakers about, what that phase 4 might be? Or is there something that is embedded in the CARES Act that doesn't, open or, trigger to sole proprietorships until, later in April? I know, it's 900 pages of legislation and it was all done very, very quickly. And so trying to sort through, is there, just like the PPP was released on Friday, is there, something else that we should be looking for or waiting for, especially as it relates to sole proprietorships?
Well, so the PPP loan program is currently only open to small businesses and, where did I put it? Small businesses and sole proprietorships, but on Friday, April 10th, it will open up to independent contractors and self-employed. So that may be what they're referring to. There's nothing else that is currently scheduled to come online in April. As far as a phase 4, right now it's unclear what will go into that. It's still, in the early stages. The one thing that we are getting a little more information on is that they want to provide more money for both the PPP and the EIDL programs.
Mm-hmm. I have a couple questions here, just for clarification about owner's draw, where they're a company that has some paid employees, but they also take compensation from owner's draw. And so are the owner's draw considered in the payroll calculations?
Yes.
Or just the salary?
Yes, and you would need to talk to your accountant about how, and the lender about how to calculate the amount of that draw that would go into the payroll calculation.
Maybe while Renat is looking for some other questions, Chris, you could also just kind of, share with us, some of the feedback that you're hearing, from our other, local chambers, and other businesses as you're working with your colleagues, throughout, the U.S. Chamber. I know we've been in touch with our colleagues in, California and New York, which are some of the other, hardest hit states. What is kind of the lay of the land, statewide that you're hearing, and is there anything you could share with us that way?
Yeah, I would say that there are just a lot of questions like what we're getting today, and like I said, this is a function of how just kind of broadly written this statute was, coupled with the government's desire to move this as quickly as possible. And so, you got to keep in mind that this was passed on March 27th and it went live on April 3rd. So it is not a, I hate to say it, but people just need to be patient as SBA and the lenders all work through this. The lenders want to be helpful, but they also are, operating with not as much information as they would like to have, and they are raising a lot of these questions that you're raising to get better guidance from the government, and they are trying to process this stuff as quickly as possible. But that being said, we are hearing all sorts of questions like this, and I apologize that I don't have all the answers. we are trying, a lot of these scenarios that you are raising are things that, are very specific to your businesses, and they are things that are going to have to be, a lot of times you're going to have to work with your lender directly to figure out how to classify these on your application. But that being said, we are trying to get you as many answers and as much guidance as we can as we get more of, as myself and my colleagues hear these things from you all, and we get more feedback from SBA and Treasury about how they want these things addressed in loan applications and how they'll address them when it comes time for the loan forgiveness phase.
No, that's great. And just in terms of some of the feedback that we've gotten when we've been talking to the SBA is that, when in doubt, just apply. As
Right.
you were saying, it's so important to get in the queue because there are limited funds. Again, we're working on expanding in phase 4 the programs that are available. But that, if you are accepted, that means that you have time to, decide if you want to accept it, right? And, getting in the queue for having either the lender or the SBA, review the application, just ensures that you have a place in line, right? And so we've been advising, our members that yes, it's really easy to get, kind of bogged down in the weeds with, what if this and what if that and maybe this and maybe that. When in doubt, please just apply.
Yeah.
And you can amend your application. You can work with your loan officer, later to update things, and edit things as necessary. So would you kind of echo that same sentiment, Chris, that, when in doubt, just apply. You can amend later.
Right. And that is exactly what I would advise. Don't take yourself out of the running for a loan yourself. Let the lender or the SBA be the final determinant of that. So you should just apply. If you fall, like I said, I've said a couple times now, if you generally fall into the category of a business, of a nonprofit, a sole proprietor, independent contractor that has been spelled out under the bill, then get an application in. The worst thing that's going to happen is they deny you, but you don't want to be the one to deny yourself the loan.
Here's a kind of a broader question that was sent in before the webinar. Actually, it says there are a lot of warnings out there about how the PPP loan is a big liability on the business owners due to the lack of clarity from the Treasury and SBA. What happens if, well, the first part is, do we know the definition of what kind of financial distress a business needs to be experiencing? And then the second part of that is, what happens if, they receive the funds and then they don't use them within the 8 weeks? Will they be withdrawn and returned?
Well, so I'll start from the back end. Any money that's not forgiven or that you don't use would convert to a loan. And it's a loan that will be due in 2 years. It has a 1% interest rate, and then the payments are deferred for 6 months. So it's a relatively inexpensive loan, and there are no prepayment penalties. So if you have money on hand that you haven't spent and you just want to give it back, there won't be any penalty for prepaying it. As for what the lender, or what the lender is going to look for, the SBA, as I said, what they're looking for is, and I'm just going to read you this directly from the document we've put together. They're going to ask you for a good faith certification that the uncertainty of the current economic conditions makes the loan request necessary to support ongoing operations, that the borrower will use the loan proceeds to retain workers and maintain payroll or make mortgage, lease, and utility payments. And the borrower does not have an application pending for a loan duplicative of the purpose and amounts applied here. So like I said, they're just looking for a good faith declaration that you are being harmed by the crisis, and that you're going to use this money for those specific purposes.
That makes sense. Thank you. Andrea, do you have any points or questions that you want to point out or make sure that we cover here?
No, I'm looking, kind of at the question, the Q&A here, some questions that are, maybe still open. I think that a lot of them we've, answered, generally speaking. One question is, if the company is, owned by a foreign entity, do you think that that will, impact, what their eligibility? Again, I think kind of just going back to, the earlier conversation of, apply, 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 right? And then, and let someone else be the person to say, no, you don't qualify. But, maybe have you heard anything, Chris, about, these
So,
loans or programs are focused mostly on US owned companies or?
it's being based on US based employees. So if you have employees in the US, you can obtain this to pay them. You cannot obtain a PPP loan to pay employees based outside the US.
Understood. And then kind of similar questions that have been coming in. A lot of businesses are, concerned about, well, maybe they haven't felt a huge economic injury, the last, 8 weeks or so, but they are projecting, future economic injury, especially if, we're not able to, reopen on May 4th. Is there a way maybe to indicate that in the application for projected injury, or it's all based on past injury, or would you again just kind of work with your lender to find a way to determine that?
I would work with my lender on that. The way the program was set up, it's envisioning you are currently experience hardship, but as the questioner points out, that hardship might not be experienced. You might not be experiencing that right now, but it's going to occur at some point during this next 8-week period. So I would definitely talk to my lender about whether I should pursue one of these loans. And as I said, part of this good faith certification is that the uncertainty of the current economic conditions. Like if there's uncertainty, maybe not this week or next week, but in the next few weeks about how your business is going to operate, that would fall into make that eligibility requirement.
If a nonprofit 501c3 is owned by a tribe government entity, does that disqualify them from PPP?
Tribal business concerns that meet the general SBA size standard are eligible for PPP loans.
So question here in the chat, I see, please confirm for furloughed employees after February 15th, do we need to bring them back by April 24th or June 30th? And then kind of the follow-up question is the furlough component and the payroll component, it's a furlough component and the payroll component that's not clear.
So you need to bring them back and restore payroll by June 30th. That is what's in the guidance. And it's for any employee that's been laid off or furloughed between February 15th and April 24th. Any employee that you lay off after April 24th, you can't bring them back by June 30th and see and reduce the amount of loan forgiveness or restore whatever would be reduced in your loan forgiveness. They recognize that between February 15th and April 24th, you're making a lot of business decisions and you weren't completely familiar with this program or even knew that this program was in existence. But after April 24th, they expect that you are aware of this program and the restrictions being placed on it. So any employee laid off between, again, February 15th and April 24th needs to be brought back on payroll and have your payroll levels restored by June 30th.
Thank you for that. And I have seen this. Okay, great. She says, good. Thank you. I have seen this come through and I believe we addressed it, but just one more time for clarification. If the employee has chosen to leave, to stop working, or to not come back, either because of fear of getting sick or their own personal decision to self-quarantine. How does that impact the company, both with the PPP and whether or not they are able to get the sick benefits?
And that's what I'm going to check on that one, just to
Okay.
make sure I've got the right answer.
Okay, great. So I definitely saw several questions along that same vein. So that's a follow-up. Fantastic.
And then here's another question regarding, short-term, property, rentals, right? So, if I have an Airbnb, for example, and, that is my, source of income. And now, we know short-term rentals, all hospitality and tourism businesses, have been, hit hard. If your income is lower because of that, my understanding would be that you could still apply for the EIDL, but not the PPP, right? Because technically, any income that would be related to a short-term rental, Airbnb, through that, type of small business, you're basically a sole proprietorship, right, Chris? Is that how that would go down?
And you can apply for a PPP, but you're going to have to figure out a calculation for how much of that income goes to paying yourself, and that's where it becomes a little difficult.
And I see one of the newest questions, will the program be recorded? Yes, we are currently recording from the very beginning and all the Q&A, and so I will make sure that communications go out once the recording is rendered and posted. So there will be viewing available after the fact. Thank you for that.
And as Renata mentioned earlier too, we'll also follow up with all of our attendees with links, not only to be able to view the webinar, but also links to the resource pages that Chris mentioned. Certainly the U.S. Chamber has resource pages here at our chamber. As Chris mentioned, he's forwarding us resources and things to post. We have those available on our website. We have a special drop-down menu related to the COVID issues, and we have our task force right there under member resources. You can pull down and just hit the Smart tab and have access to all of the previous programs and resources that we have. Again, we hope to be hosting at least one of these webinars every week. We are scheduling them out based on the number of phone calls, questions, and emails that come into us at the chamber. We're definitely, trying to be there to, field and answer all of your questions, one-on-one. You can always call us 206-575-1633. You can always email us. You can email me, Andrea, at seattlesouthsidechamber.com. Or staff at seattlesouthsidechamber.com. And again, if we said that we would have an answer for you later, Chris, made a note, Renata's made a note of those things that we need to get back to you on, and we will absolutely get back to you on those. Future webinar topics are going to be focused also on individual sectors. So as I mentioned, the hospitality and tourism industry has been hit pretty hard. Also global trade and logistics. So we're scheduling a new webinar with Sam Kaplan from the Center of Excellence Global Trade and Logistics with Highline College. He'll be joining us for a future webinar. And then also with our retail businesses, again, so many of our brick and mortar retailers have had to move to online only, and that has come very, very quickly for them as they've had to get that up and going and adjusted. So we're going to have some panelists talking from the ICSC. They will join us to talk about what's happening within the retail industry. And again, we are here for you to answer your questions, provide, resources and education. So if there's something that you would like to see us provide, again, please don't hesitate to reach out. And so with that, again, thank you so much to Chris Eyler from the U.S. Chamber. We appreciate your collaboration and your partnership. Thank you to our staff and our board for being able to provide these opportunities to our community and our members. And, thank you so much to our participants that were able to join us. And, please stay connected. Please don't hesitate to reach out. Be well and be safe.
Thank you.